What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Got a little throwback Thursday shirt. This is, 20 years ago almost. This is when my football team I played for, we made it to the Final Four. And, I don't know, I just felt like wearing a throwback shirt. So, these dividend stocks I own. And I own all three. They're less than $5, and there's a huge risk to these. But I'll explain to you why I'm buying this stock. And again, this is not financial advice, for entertainment purposes only. Disclaimer in the description. But I'm going to buy more. I like the trends. These guys were hit hard during the pandemic. And I'll explain to you why I am long in these guys and continuing to buy more. Some of them I just leftover money when I buy dividend stocks on E-Trade. I just throw them in these. So if you're new to this channel, again, hit that notification bell so you don't miss future videos. Smash that like button. And let's check these stocks out right now. My first dividend stock I would like to go over is Sachem Capital Group. So these guys have a PE ratio of 11.27, a dividend yield of 9.78%, a volume of 239.52K, market cap 174.37 million. Year range is 440 to 655. Stay range is 490 to 499. And its previous close was 499. So it's just below $5. So what are these guys about? Let's check them out. Right here, they are a Connecticut-based real estate finance company that specializes in originating, servicing, and managing a portfolio for first mortgage loans. So this is another mortgage-backed real estate investment trust. So right here at Sachem Capital, we seek to maximize our adjusted returns and preserve and protect capital through our disciplined and credit-based approach. Our leader has successfully originated and serviced our portfolio for short-term real estate mortgage loans, generating attractive annual returns under varying economic and real estate market conditions. So here's the thing. Their mission statement: Sachem Capital was created to serve the financing needs of real estate owners and investors. We match the needs of our borrowers with capital from our investors and shareholders who entrust us to make prudent investment decisions. So they're cheap right now. And I just showed you in the graph that they haven't done well against the S&P, which is attractive. But we need to go over their revenue and their dividend history, and I'll explain to you why I like these guys. So this is what attracted me to these guys. So look at this. This is in millions US dollars. 2014, 155. 2015, 278. 2016, 413. 2017, 699. 2018, 1171. 2019, 1268. And 2020, 18.6. So even during the pandemic, they were increasing their revenue, which attracts me to these guys. And, you know, there's always a risk with stocks that are less than $5. You can classify them as penny stocks. So they're high yield dividend stocks, okay? And you just have to be very careful with these guys, and I'm willing to take the risk. And I'm going to show you the dividend history in these guys. What attracted me to these guys. And again, real estate investment trust, you always want to look at FFO. That's very important, AFFO. So revenue-wise, it's going up, and their dividends are going up. So look at this. So 2017 was 5 cents to 10 cents. 2018, it's 11 cents. Then it was 12 cents, and then it hit 17 cents. Then it went down to 12. So it is going up over time. Now again, remember, 90% of what they make has to go back to the owners. Look at this advertisement right here, Arbor right here. You know, these guys are doing fantastic, and I own these guys as well. So mortgage-backed real estate investment trust that is increasing its revenue, and over time, it slowly increased its dividend. So I'm going to own these guys. I'm going to buy more shares. I'm going to try to get to 200 and see what happens. I'm going to be long in these guys. I feel very confident in my decision. Again, this is not financial advice, for entertainment purposes only. Disclaimer in the description. I'll repeat that 1,000 times because I have to. But I like what I see, and it's less than $5. Let's jump to the next dividend stock. You want to talk about being unlucky. Look at when these guys pretty much launched in October 2020 when the pandemic was ugly. So the symbol is SQFT, Presidio Property Trust Class A. Has a dividend yield of 11.80%, a volume of 47.73K. The market cap is 44.02 million. Its year range was 263 to 563. Its day range was 352 to 358, and its previous close was 353. So I had to look into these guys a little bit more before I made a decision in buying these guys. Let's check them out. So check this out right here. Presidio Property Trust Portfolio has historically been diverse in product type consisting of office, retail, industrial, self-storage, and residential properties. We strategically pursued strong opportunities regardless of property type. We have now refined our portfolio through calculated dispositions to focus primarily on multi-tenant office. So this is the thing that's important about them, is their properties and seeing what their capabilities are. Right here they have some service centers, Union Town Center, Arapahoe. So they have some stuff in Colorado. Looks like North Dakota right here. California. So they have some places right here. They're very small. Okay, that's one thing that to be aware of, is they're very small. So they have commercial properties as well as residential properties. So they have, let's see, in Texas, Wisconsin, Illinois, and Florida, they have 1, 2, 3, 4, 5, 6, 7, 8, 9 buildings that they have. So they're trying to diversify, and they're small. So I had to look up a lot of stuff on them, including their revenue, because am I going to buy these guys if their revenue sucks? That's one thing that I had to look into before I made the decision to buy these guys. And again, you want to talk about being unlucky and taking a hit. So right here, the total revenue in 2018 was, this is in, it looks like in US dollar thousands, okay? 32,344, and then 28,641, 24,352, and then 19,231. So they got hit really hard here. Gross profit, obviously it went down because you can point the finger at the pandemic. So these guys have been hit big time. It's going to take a while for them to recover. And the dip is there, so I capitalized on the dip. And it's just such a small portfolio. This one's a risk as well. But I like their dividend history because their dividends are going up. And, you know, REITs are pretty good and established. I mean, these people know what they're doing most of the time. I mean, I'll tell you the story of, you know, the BRICS rate on Saturday. I'll reveal that to you. But, you know, these guys appear to know what they're doing. And these guys are a publicly traded REIT compared to the BRICS rate, which was a private REIT. So let's check out their dividend history. I mean, you want to just talk about unlucky. Like I said, I mean, it kind of came public and launched right in the middle of a pandemic. I mean, that's just unlucky. So here's their dividend trends. So 10 cents, then 10.1, then 10.2, then 10.3, then 10.4, then 10.5. They're slowly going up. So that's one thing that has my confidence with these guys, are the trends are slowly going up. Now they are a very high yield dividend stock, and their annual dividend right now is 42 cents, but they're 356. So I load up in these guys. I'm going to try to get to potentially 300, 400 shares and then see what happens with these guys. So let's jump to the final dividend stock. That last one is IVR, Invesco Mortgage Capital. It's sitting at 198. I loaded up on these guys for sure, and I'll explain to you why. Its dividend yield is 18.18%. Sounds like a yield trap, but let's look a little bit more into it. Volume 5.05 million, market cap 653.22 million. The year range is 195 to 460. Day range is 197 to $2. Previous close is 197. So it's less than $2 right now. So what are they about? So Invesco Mortgage Capital is primarily focused on investing in, financing, and managing mortgage-backed securities and other mortgage-related assets. The company's objective is to provide attractive, risk-adjusted returns to its primarily through dividends and secondary through capital appreciation. The company invests in residential mortgage-backed securities, which are guaranteed by the U.S. government agencies such as Government National Mortgage Association, Ginnie Mae, a federally chartered corporation such as the Federal National Mortgage Association, Fannie Mae, or the Federal Home Loan Mortgage Corporation, Freddie Mac, collectively known as the agency RMBS. The company also invests in commercial mortgage-backed securities and RMBS, which are not guaranteed by the U.S. government agency or a federally chartered corporation, as well as commercial mortgage loans and other real estate financing arrangements. So, we're going to go over their revenue and their dividend history. So check this out. This is in millions US dollars. 2015 it was 650, 2016 it was 478, 2017 545, 2018 643, 2019 778, 2020 280, and then 2021 169. Look at how hard these guys are hit right here, 2019, 2020, 2021. So I studied these guys even more to make sure that I knew what I was doing, and I made my own due diligence and decisions on why I bought the dip and why I'm buying them. So let's look at their recent revenue. So their earnings call, they beat it by 2.56 in the fourth quarter in 2021. Third quarter and second quarter, they were at 8.11%. So they did beat some things. But, you know, the thing is, we have to study the long term and how things are going to go. This one's probably a huge risk out of these other two. Obviously, you see with Sachem, the revenue's increasing. SQFT, it's very small, so that's kind of expected. But these guys took a hit, a major hit, and I'm going to go over their dividend history. So check this out. 2013, it was 65 cents. Then 2014, it was 50 cents. And then 2015, it was 45 cents. And then 40 cents. And then 41. Then 42. Then 45. Then it hit 50 cents in 2020. Then the pandemic hit. And then it went to 2 cents. And 5 cents. And then 8 cents. And 9 cents. So this one's a big risk. And I have a lot of shares in these guys. Dividend yield is very high right now. So, I did my research, and I feel confident in my decision. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description. I study the trends and dividend analysis. Eventually, they're going to come back. It's going to take a long time. And it's not a guarantee that they're going to make a comeback, but they took a huge blow. And I'm willing to take the risk to put some money in, leave it alone, and see how much I can make with dividend income once these, let's just say if, I'm not going to say once, I'm going to say if they get back to where they were. Because there is a lot of potential if they come back to where they were. But that's not a guarantee. So let me know what you think of this video. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to post a video tomorrow. Let me know what you think of these three dividend stocks: Sachem, IVR, and Presidio Property Trust. Do you own any of them? Are you long in any of them? Let me know what you think. You guys take care and have a good one.